Financial markets are hopeful for some breakthrough during an emergency European summit on Greece today. Joining me from London is Bank of America strategist Thanos Vamvakidis. Thanos, it seems like there's some mixed feelings as whether there will actually be any sort of breakthrough. What's your thoughts on what comes out of this summit today?
Well, we don't expect a final decision. On the positive side, the Greek government has submitted some proposals that seem to be in the right direction. However, the Europeans will need to evaluate these proposals in the next few days before they are able to say whether this is enough in order to reach the achieved targets. Moreover, the Greek government has made it clear that this proposal for additional fiscal consolidation is conditional on debt relief. And that's very important. This is something the Greek government needs in order to be able to approve unpopular measures. So yes, we had some progress today, but we are not there yet. Most likely we're going to have another summit later this week.
I know just a few weeks ago you thought the chances for Greece to repay the IMF by the deadline of June 30th looked slim. Does it look like that's improving a little bit? Will it make that deadline? And also, can you tell us a bit more about your view that even if that deadline is missed, it's not an automatic default?
Even if they have an agreement this week, it is very likely that Greece will not be able to repay the IMF early next week. The logistics of finalizing a deal meeting the prior actions for further disbursements of loans take time. But at least missing the payment while they have a deal is not necessarily a negative scenario because there is some flexibility. Greece will not be automatically in default to the IMF. However, if they don't have a deal this week and they miss the IMF payment, then this is likely to trigger a chain of events that will lead to sovereign default. So it is very important to converge towards an agreement by the end of this week.
So in the meantime, there are other issues going on, such as funds leaving the banks in Greece. Do you expect the ECB will continue extending liquidity to the Greek banks? Is there any other choice?
Yes, indeed, this is a key risk. Banks have been losing deposits and the ECB has been increasing the emergency liquidity assistance. As long as they are converging towards a deal, we expect the ECB to be there to provide the necessary liquidity to the Greek banks. But this is another indication of the urgency of the situation. Further delays could lead to further acceleration of deposits and increased risk of a bank run in Greece.
Thanos, we've seen some dramatic market swings over the last couple of days based on perceptions about how these talks are progressing. What exactly today is the market pricing in, and are risks being priced correctly?
We believe that the markets may be complacent in this case, just because we are at the deadline. The markets believe that we will have a deal. Indeed, it was quite interesting the extent to which markets reacted positively today just to the headlines that the Greek side has submitted some proposals, even though we don't have a deal at this point. And the truth is that even if we see some further progress in the days ahead, too many things have to go right and risks remain very high. And the fact that the Greek side, in order to have a deal, needs something on debt relief points to the difficulties to finalizing this deal. So we do not believe that the market is fully pricing the risks involved. If we see negative scenarios in Greece, we will expect that this will be negative for European equities, negative for periphery rates, and negative for the euro, at least in the short term, because we'll expect also the Europeans to have very strong incentives to hug the periphery and try to address any contagion risks.
Thanos Vamvakidis, thanks very much for your time. I'm Rhonda Schaffler for The Street.